Welcome to another day in the Matrix. This is Red Pill Podcast 121. Hope you're all having a beautiful weekend. We have a very big week coming up in this market, so we're going to be looking at the indices today, just kind of giving a recap of the traditional markets and the setup moving into this big week with the next Federal Reserve FOMC meeting that we've been talking about week after week, but we're approaching it just a couple days away. So it's really important that we pay attention to what's going on right now in this setup. And I'm going to be breaking it down for you all here today. So make sure to get your pen and paper ready. It's definitely important to take notes because there's going to be a lot of information in today's podcast. Again, welcome. It's so nice to have you here. And make sure to get comfortable, relaxed, grab yourself a cup of coffee or tea if it's the morning, or a glass of wine or a beer, any beverage of your choice. It's going to be a ride today. I hope you all are doing amazing. Again, Red Pill Podcast 121. And if you're new here, welcome to the Wolfpack. So great to have you here with us. If you have yet to get access to the Discord, just go ahead and send me a Patreon direct message over on Patreon with your Discord username and the last four numbers after your username, and I will reply back to you in a Patreon message with the Discord server invite link. Please do not comment anything about Discord inside of this podcast, or email me or send me any messages anywhere else. The way I just explained it before is the only way that I'd be able to get you onboarded into our Discord, so I appreciate your understanding. All right. Let's just get straight into it. We are already well aware that we have that Federal Reserve FOMC meeting this Tuesday and Wednesday, July 25th and July 26th. So you could anticipate tomorrow, when the traditional markets open, through Wednesday, to be volatile. As usual, surrounding this time when Chair Powell speaks, the market becomes a real circus then. So we know the Dow Jones, Chicago Mercantile Exchange, precious metals, so that's also including Forex, will be opening up a little bit later today, right around the time that we have our weekly close for the crypto market. You could be seeing the volatility kick in pretty much around the crypto daily close today, being the weekly close as well. Before we get into that, though, let's just kind of maybe take some time to actually look at the traditional markets right now. Let's go ahead and review those charts. I feel it's important to pay attention to the major indices at this time, since we know we're approaching overbought territory for the Dow Jones, S&P, and NASDAQ, kind of overextending this automatic rally phase into an area that's really going to trigger FOMO for retail investors. Just one moment. Okay. So it gives positive sentiment for mainstream financial channels to continue to do what they do best, which is hypnotize retail and keep them falling for the same sentiment cycle over and over again. And also, everyone, excuse me if I have to pause a couple times during today's podcast. I've been really talking a lot lately. Yesterday, we did a 3-hour live stream, so my voice has just recovered a little bit since then. I'm going to do my best to get through today's podcast without any big interruptions, but you might hear me take some pauses here and there to just grab a sip of water. I'm sure you understand. But getting back to this, I just want us to be aware of moving into this next week and how you're probably going to hear a lot of bullish news up until we actually have the FOMC meeting itself. And then when Jerome Powell speaks, you're going to see a lot of mayhem in the market. So don't be surprised if during that meeting, crypto looks wild. So you heard it here first. And again, kind of what I warned about a little bit earlier, I could see it being volatile as early as this Monday. You know, with how overheated the stock market is, it's definitely something I'm anticipating. So with the indices up as high as they are, we should discuss some scenarios to consider for what to expect next leading into this crucial FOMC meeting on Tuesday. Now, I know you guys really enjoyed when I did the 3 different scenarios for Bitcoin video podcast. And when I went over those, I actually put it in the title of that Red Pill. So if you want to look for that Red Pill podcast, it should be pretty easy to find. So with that, I'm going to be doing the same thing today, actually, but I'm going to be giving it to you with the indices, particularly focusing on the Dow Jones, and then we're going to take it from there, give a quick recap of those 3 scenarios, how they could play out in S&P and NASDAQ, although it's pretty much a copy-paste scenario. Once you know what I'm about to go over with this Dow Jones chart, you could apply the same thing to pretty much everything else. So we have scenario number 1. I'm going to clean everything up for you guys, make it nice and basic, just the candles here. And scenario number 1 is a bull trap, which is a true automatic rally. Essentially, you just keel over here and you start to break structure. And if I showed you with these fib extensions, these retracement levels, we have right now started to surpass the top of the golden pocket. That's a really overheated example of an automatic rally. I mean, we have seen in Bitcoin in the past do this, but we're looking at the Dow Jones right now. You know, this is really interesting. My next 2 scenarios are going to be really revealing about what you could expect if we do continue up. But needless to say, if we were to start to reverse here and this was a true standard textbook bull trap where we come up, you know, lower high in the structure and then roll over, we could confirm that it's a real automatic rally if we start to break below the 382. Now that's a ways away to the downside, and we can see that by looking at trend. We have the low here, higher low, and we're looking real good. I mean, we could just place a basic trend line right there and kind of show an idea of we're like moving parabolic. I mean, if you were to look at this on the weekly chart, this is going to be a straight line. It's going to look pretty straight line. You know, like if I really zoom out, I'll show you what I mean. Like this recovery has been, yeah, wow, definitely unexpected. You know what I mean? Like this is wild. Anyways, getting back to all of this right here, and the idea is that if we were to roll over right now, getting a lower high from this point right here about April 21st of 2022, again, it's a lower high no matter what until we get above 37,000. But the fact that we've gotten above the 786 right now is telling that, wow, you know, this is bullish. It looks very, very bullish. And when everyone gets bullish, is it time for you to get wolfish? You know, like you need to start being a little bit like scared, you know, for where the market's going. You know, when it's fearful, that's when you want to start salivating. But right here is insanely bullish structure. This chart looks really, really positive. Now, going into scenario number 2. So just to recap, scenario number 1, textbook bull trap, getting rejected around where we're at right now, folding over, retesting the 0.5 fib soon, and then breaking below the 382 would be a real confirmation of what we call an automatic rally. Now, scenario number 2 could be a continuation up to a double top. Now, you could look at the double top anywhere between 36,500 to essentially 37,000, like just perfectly kind of around where we get these 2 wicks right there. 2 daily candles pretty much rejected, and then a pretty substantial correction. So there's a scenario number 2. No need to break it down further than that. It would just be a really far extended double top. Now you have scenario number 3. This is fun. This is the most tricky of scenarios, which is a slightly higher high. Essentially a new all-time high, which is a false rally. A popular example of this would be actually looking back at Bitcoin. So we're going to go over here to the Bitcoin chart. I'm going to kind of show you what I mean. I'm going to turn all this noise off. Just have another tab pulled. So with Bitcoin, you have right here your all-time high, getting rejected after this April 2021 test of about 64,000 into the start of our lunar cycle, which was right around May, into the lunar eclipse, which then led to a relief rally that actually went up into a slightly new all-time high, which is a higher high bull trap, because we see that we did not go much higher. We just actually entered a bear market. If we were to look at the percentage up from that prior all-time high to the new all-time high, it was only about a 6% increase. So you can see why it's called a bull trap. So if I was to title what this is called, it would just be a rare higher high bull trap. They're not popular because This was an all-time high. So when you get those all-time highs, you have that saying where people are like, show me a new high, I'll show you a buy. I mean, I've never looked at analysis that way. I think that's really an unfortunate way of looking at things, because you don't want to wait till you're at new highs to start purchasing. You should have been accumulating when everyone was scared and fearful, and you guys know the drill. I'm not even going to waste your time with that. But that is a popular saying. It's like that other saying, sell in May and go away. That's a quote that comes from the traditional markets from at least 50, 40 years ago. The same thing you hear with this, the trend is your friend until the end. Well, you have that saying, the show me a new high and I'll show you a buy. I mean, I really wouldn't look at it that way unless we were in maybe a really long-term consolidation bear market and then we just started to maybe break like the automatic rally levels. But that's totally different from what those analysts would consider to be that example. Anyways, getting back to this, I think that this is a beautiful example of a scenario number 3. High, correction, relief rally, then you even went up one leg higher, slightly new all-time high, then you get rejected, which leads into right here, when you broke lower, you broke the horizontal support, boom, lights out. That's confirmed really elusive bull trap. Okay, now let's go to the Dow Jones and actually show an example. And this is really nice because we're actually able to look back in the past and see a time that this happened, and it was right here. Now look at this chart structure. This was the all-time high at the time, January 2018. Then you get a big rejection, sideways for about 280 days or so. Slightly new all-time high, just kissed into a new all-time high. And then boom, sharp correction, sell-off. And you can see that we actually started to break through a support level that was in play for 400 days. That's big. You know, that's a lot of data that we're looking at right here. And it's the Dow, you know, so it's a traditional basic. Anyways, you get where I'm going here. Now, if you look, we only went 1% higher. It's like 1.2% higher high. This is a really elusive bull trap. Okay. So you can see the idea here, why this scenario number 3 is really fun to talk about and discuss, because it's definitely a possibility. You see the way that this is moving up, just moseying along up the way that it is. Well, let's pull up the Dow Jones and kind of compare it to today. I think that'll be also fun to just have the comparison. So look at the vibe here, how it's just like boom, 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 like really nice, steady. It's kind of similar the way that this is chopping up. Just it's not happening with as much volatility. Of course, this was a much different market back then. We had in this market, we had the C-19 global pandemic, just huge crash, which ended up being a bear trap, V-shaped recovery, led to new all-time highs, a really overextended all-time high, which we chopped at for a while. We had a Shemitah cycle here, which we didn't back here. And then we've had all the things that have gone down since, you know, Ukraine-Russia conflict. We're having talk of CBDCs. Federal Reserve just launched Fed now. I mean, we're in Jubilee. We weren't back then either. But I just wanted to show you this as an example. So you can say like, hey, Waters, like, what do you mean a new all-time high? Followed by that being a bull trap. You know, well, that happens. And you could go back in the past and you could start tracking when these moments occur. I would at least look for about 200 days to 1 calendar year of data. If we take from this all-time high down to this correction, it was 330 something days. Wow, it might even be 333 days. Almost, right? If I take from the exact high. Yeah, wow, pretty cool. It happened in a transition of a weekend, I suppose, but it doesn't really matter. It's just interesting structure. I just wanted to share the concept, and I think that this is something that, again, we saw Bitcoin do it when it went up to 69,000, followed by that rejection, and then we've seen the Dow do it quite recently, actually, because 2018 isn't that long ago for the fact of how long the Dow's been active. All right, so let's entertain what this would be like today. Okay, I think that's where we could have some utility for this theory. Oh, and by the way, I'm not saying we're going to get scenario 1 or 2 or 3. I'm just sharing the scenarios with you guys These are things that could play out regarding, what we could anticipate with this next FOMC meeting. These are like the most likely things I see to happen. Okay, wait one sec. You know what I should actually do? I should be looking at in 2018. What month did this stop out in? Ooh, October. Wow. Yeah, we moved up through August. Really wild. If they were to do some shit like that again, that would be massive. Let's go ahead and look at the FOMC calendar and see. Where is this? Okay. Clearly isn't that important. Okay, the next one is in September. Right after Jubilee's over. Fuck. That's a big gap between. That gives you the whole month of August as like a... Yeah, this month of August is going to be a very interesting wild card. But like, okay, look at this. So the Fed meeting is the next Fed meeting, not the one that's coming up this week, but this one's the 19th through the 20th. And this market topped out like this was the 20th when it first broke into a slightly new all-time high. That's really wild. If the market was to do that and then just crater to the downside into the Q4, it'd be real interesting. Ooh, gotta wait and see. Here, look at this sharp spike up through the month of August. And then I showed you guys in the Fed... No. It was the August Blue Moon decoded. The way that this market operates in August typically over the last 10 years has been bearish. Over the last 10 years. But we do have anomalies. I think the August after the C19 was positive. There it is. And then we had this August of 2022. Not the greatest example in sorta. No, that's really not that helpful. But yeah, it's fun to play around with this. And that's not the best way to do it. Like, you want to look at technicals, of course, like what I said earlier to start this whole thing out. The fact that we're seeing the Dow above the 786 is a continuation sign. So going up more would definitely not surprise me based on how bullish this looks. And just looking at the chart structure, you can't deny that, right? The scenarios we're going over now is just entertain what's likely to be at play given, what could go down. Because just the fact that Fed now just launched, I really think that there's going to be some change coming to this economy soon. Probably in Q4 it should be noticeable, as we've talked about so many times. So if we were to mimic what this would be like today, that would be like the Dow Jones coming up to about 37,500 points on this, what I'm calling a rare higher high bull trap, and then getting rejected, coming all the way back down to about 30,000 points. Pretty much be at the same level as the end of the Shemitah back in 2022, the 7-year cycle. But if we consider the horizontal support, I'm going to go back to here, and I want to consider this horizontal support in this prior example. And it's coming in about right here between 23,000. I'm going to put it at 23,500 because we have this rejection here, this breakout level, this back test, about 4 of them. That's a very clean level. So 23,500 going down to the sell-off is about 7 or 8% down. Now, if we were to entertain 8% down from the local lows, where that would bring us is about 26,300 on the Dow. Boom, like right there in this awkward W pattern, which, oh goodness, it's like perfect. If you look at what I'm saying right now, look at this level. It's literally the high of the structure. We were just talking about this structure. This is your all-time high correction, new rare bull trap because it's a higher high, followed by this deeper sell-off. Now, this back test here was the last bigger correction before moving up into an all-time high. And that would be the exact sell-off point if we were to copy, being about an 8% correction from the lows. Pretty cool. So the first line to anticipate if we are to have a more dramatic sell-off would be somewhere around 26.3, and that makes so much sense, like especially with what I just said. And we could still have an all-time high and make that happen. Like we can literally go up to 37,500 and then come all the way down for about a 29% correction. Not weird. Let's look at the sell-off of C19. That was a 38% sell-off. And I'm not calling for something this dramatic ever again. I don't think we're going to have a global... I shouldn't even go there because I think it spawns a whole new conversation. We'll get to that another time. Right here, we got about a 19% sell-off, nothing that big. But if we start to analyze the, 2008 subprime mortgage crisis, you're looking at about a 50% correction. And if you were to look at this correction of the dot-com bubble from all-time high to this sell-off, it was about 38%. So given, what we're talking about here, a 30% correction is in the cards for sure as a possibility, even if we make a new all-time high. So I hope you guys appreciate this, because I feel like it's very unique and gives your, it just expands the mind a little bit about what could occur. So again, this is a very tricky scenario to determine how it will all go down, but I feel it was necessary to bring up the idea because it's not a popular setup. It's a very elusive setup. It tricks the majority, and that's kind of what the market maker loves to do best. So watching the Dow, S&P, and NASDAQ closing weekly candles above this golden pocket is a sign that, we need to be very open-minded to what the trickster has up its sleeve. This upcoming FOMC meeting will be the moment where we see how they're going to play this. But based off the technicals, this is primed for a retest of all-time highs. The double top is definitely a possibility, and even scenario number 3, which we went over as a rare bull trap. So that wouldn't shock me. And all I'm personally interested in is to see how either of these scenarios will play out for the crypto market. And I'm sure that's what most of you are focused on as well. But by going over this, we can get an idea of the energy of what's to expect for crypto, right? Because if the Dow starts moving up like that, we typically see that energy move into Bitcoin, which then moves that energy into ETH and the rest of the altcoins. Now, I will be getting into the S&P and NASDAQ in a moment, but I wanted to just recap the 3 scenarios. So scenario number 1 is just rolling over soon, below the 888 fib at least. That would be your textbook automatic rally. This was your normal bull trap. Now number 2 is a double top. Then number 3 is the idea of a slightly new all-time high, followed by that being a rare bull trap, then correction. Now, some of you might be saying, well, Waters, what about if we just keep going up? What if this is a real, just like we're in a bull run again, Well, if that's the case, that would be very, very rare. Like, honestly, that would be extremely rare if we started going into close to this 1618. I mean, that would blow my mind. That would really be shocking. So I don't entertain that right now. Even if we start to break into a new all-time high, I would see it as that scenario number 3 more than likely. Just a slight move up and a correction. And if we wanted to track what would be that level, I think this will be fun. We're going to take from the local high down to this swing low. And we're going to look at where our 1618 is right there at the double top. That's cool. You see what I did, family? What I decided to do was I took from the local high to this local low because this was your structural break in the micro. And it puts our 1618 right there exactly at the last all-time high. So a double top is technically in the cards with the way that this is breaking out. I mean, you can't deny it, right? So there it is. Like, I would wager more on us getting close to prior all-time highs within that band with just the way things are going. But again, we have this FOMC meeting coming up. They can reverse this market at a tip of just within seconds if they want to. I don't really think we're as bear as much as we are bull. I'm leaning more towards bullish, like 65%, 70% into more bullish to go until we get into the month of August. And then with that blue moon, I'm not feeling good about the end of August, that's for sure. And I've already told everyone I'm not feeling good about the end of Jubilee. I'm not feeling good because we're around the 22nd anniversary of 9/11. That's the 22, the Master Destroyer, Master Builder number. And then we also have Rosh Hashanah right there the next week. as well as we have a solar eclipse in October. So yeah, it would be really shocking if we were to have market continue up during the majority of August like we saw last August, or if we were to see this repeat where it does move up halfway through and then a deeper correction. I mean, that would typically be what we've seen in the majority of the data over the past 10 to 20 years for the indices. Basically a red monthly close for August. Just a quick recap on the S&P, because like I said, it's going to be similar information. Okay, here we are. We're pretty similar to the Dow, so we don't need to spend too much time on this. We broke above the 786 fib. This is primed and ready to be moving up to a new... wow, this is just insane to look at. This is really insane. All right, well, there it is. The setup was so bullish. I mean, we have this broadening megaphone pattern that was in play for a year. We broke above it finally with 1, 2, 3, 4 resistance rejections, broke through it, and then back tested it to confirm it as a new support. And then the moment we broke here, which was the prior high in the structure, we just started moving up in a straight line. That's a technical play. Everything I just said is a very technical play, and it's clean because it's an indice. Crypto, this wouldn't be so clean, but this is insane to watch. We knew we would get an automatic rally. We knew that we would move up into this golden pocket, but this extending all the way close to this 888, that's very odd. That's very odd. Now, we have the same 3 scenarios. We don't need to go over them again, but let's go to the NASDAQ because we just had something happen that I did say would happen. I talked about in... I believe it was Red Pill Podcast 118, the last time I went over these indices. I spoke about the 888 rejection level. Look at this. Look at that rejection on the 888 and how harsh it was actually. This looks like a blow off top to me. So are we going to watch the same thing happen in the Dow and the S&P where we get up to that 888 extension and they get rejected? That'd be fantastic. I mean, I teach you guys this, to be looking out for this 888. And this has really been moving up in a straight line. Like if I went to a weekly here, closed it all out, this looks like a, right? Like it's shocking looking. Like what is going on? We are literally about to make a legendary M pattern. Like a 600-day M. That's wild. Yeah, wild. Yeah, this is crazy. And the fact that it could come all the way down to 11,000 points is probably really messed up. These tech stocks are about to get drained. Oh, goodness. I would really be de-risking any big tech positions right now. Not financial advice. This is too much. This is overextended, to say the least. So we already went over this idea of the 888 fib. We hit that level gorgeously, have gotten rejected so far with a pretty harsh rejection, and now we need to see how we play on the top of the 786, because we could totally come back there, trade there for a couple of days, and then have one of those 3 scenarios play out. Scenario 2 or number 3, your double top or the slightly new all-time high. But the way that this is moving, it really looks overheated. It looks like it needs to have a short-term reversal, at least back to the 702. I don't want to spend too much time on this, but I think this is very educational stuff, and everything that I'm going over right now, you could apply these strategies to crypto 100%. So please keep that in mind. So let's get over to the dates. Remember, we're moving into this first quarter moon in a couple days. July 25th, the same day as the FOMC meeting. Those first quarter moons tend to be pivot points for crypto. So the fact that we're seeing the top cryptos stall out right now doesn't surprise me, as we've watched Bitcoin top out in this microcycle just 2 days before the new moon, as it has, started to correct slightly, moving out of the new moon and into the full moon. That is what we typically see month after month. So again, we saw Bitcoin top out, I believe it was on the 15th of July. Let me just check out the chart real quick and make sure that we're telling the truth here. So boom, right there. You have right there between the 13th and 14th, we made it up into a slightly new all-time high. That was our last rejection off of 31,000. And that was just 2 to 3 days out from the new moon. That's what we typically see within that 5-day window. Now, what I said earlier is that these first quarter and third quarter moons are our pivot points. It's when we tend to start seeing energy reverse out. So I would not be surprised if around the 25th into the 26th, we really solidify our structure at the lows. And we're talking microcycle lows. And then this could be the setup kind of moving out of the FOMC meeting. So once we make it through the first quarter moon, which just so happens to be the same date as the Federal Reserve speaking, by Wednesday, July 27th, we should have a little bit more clarity on the situation. And since we're starting out the month of August with a full moon, you're aware this month also has a blue moon. It makes it a wild card, you know? Watch my recent presentation, August Full Moon Decoded, if you haven't already. That will definitely catch you up to speed on this. But one date that actually sticks out to me that I wanted to break down today in this video is the 31st. So the 31st is interesting because it's actually going to be the start of the 31st week of the year. You can see that right there, week 31, starting on July 31st. So you have the 31st day of that month. Wow, it's 31 minutes into the podcast. That's fucking crazy. Okay, so it's 31st day of the month, 31st week of the year, and that number 31 is the 11th prime number, okay? 11, master number. It's really important to know this. July equals 11, all right? We're seeing that directly in the code, and that's the month we're discussing here. It's the last day of that month, so 11 represents a restart energetically, 11 being the master number. So speaking of 31, I just wanted to go over this. You guys probably remember that Silicon Valley Bank, brought this up so many times, but it's important because it was a crucial event in the dominoes falling in the retail banking sector, and we have to continue to bring it up. It was such an important moment. So March 10th, if you look at this date, you can see that it would be written 310 or 31 because you remove the 0. So you have another 31 connection, and this was on that date, okay? Now, remember, 31 is the 11th prime number, and the day that Silicon Valley Bank failed was an 11 standard date numerology. Also, if you wanted to go esoteric for a moment, this March is actually your first month, so this should be 1-1. It's still coming back to 31 no matter what, because 31 esoterically, again, you have, I guess when you study mathematics and you're aware of this, it's the 11th prime. So even if you wanted to call this 1-1, it's still the 11. It's still the 11 date numerology in the Gregorian system. In Gregorian, it's still 3-1. It's all that 31 tied back to the number 11. So I think this is really fascinating. Now I'm going to show you a couple of date connections here that really solidifies the importance of this day. And if you take from July 31st, 2023 and tie it to the solar eclipse, which happened on April 20th, you're going to see that this is, oh, and by the way, the reason this is so significant, this eclipse, is because it was the start of a solar cycle. They only come around every 2.5 years, and every time that we're in it, in those 2.5 year intervals, Bitcoin is in a bull market. Just remember that. It's not always bullish the entire time. Of course, we have the halving event that kind of makes a little bit of, a little bit of an interesting shakeup in this whole conversation. But esoterically, we see in these 2.5 year cycles, Bitcoin is in a bull run during solar cycles. When it's in a lunar cycle, we are in what we call a bear market. So that's why this date is so significant and why we're going to be using it moving forward as a connection point. So this date connection is 102 days apart. Now, I've been talking a lot about all of this 102, 201. I discussed it in my last YouTube video, so if you haven't checked that out, definitely go watch that. But the Federal Reserve launched their Fed Now service on July 20th, which is the 201st day of this year, number 21. Oh, wow. And these 2 days are separated by 11 days. Like 31 is the 11th prime, and this is the 31st day of the week. Okay. Wow. Okay. And then 21201, that becomes 2 1s, which is 1 1. So again, you can't like escape this code in the way that it's tied in. Now, let's connect this to Satoshi Nakamoto's birthday. This is important again because we're talking about crypto. This is Satoshi Nakamoto's last birthday, April 5th, 2023, and it connects by 117 days. And Satoshi, the mythological character that created Bitcoin, equals 117. So you have 117 days apart. Bitcoin equals 117. Also, Satoshi turned 48 years old on that exact date that I'm talking about now. And well, if you connect this date of July 31st to the last day of Jubilee, which is going to be the 17th of September, that's 48 days apart. You can't make this up. So yeah, as you can see, July 31st is packed with connections. And I think it's a little bit more powerful than the last date that I shared, because that last important date that I was talking about before, I think it was 22nd of July, yesterday. It was on a Saturday, and I always articulate that with you guys. You know, it's important that when we look at these dates and these connections, if they fall on a Monday through Friday, that's powerful, you know, because we're going to have the banks open. We're going to have the stock market open. People are working. This is like a prana harvest. You know what I'm saying? Now, I know FedNow is live, so now FedNow can do transactions 365 every single day, every single second, but that's not the whole market running on FedNow. It's not. You could look at their partners. It's not every bank. It's not, the stock market isn't running on it. You know, so just be aware that the liquidity that's involved in this FedNow thing is not, it's not all the money. It's a portion. And over time, we'll see how this project goes. I mean, I think you guys, as I said in the FedNow Decoded, you can see the writing on the wall, but we don't want to go there right now. I think this was a mind-blowing connection between July 31st, Satoshi Nakamoto, and Satoshi's birthday being 48 days, or sorry, the day being 48 days away from the end of Jubilee, and he's 48 years old. So the final thing that I wanted to share, since we're in fact in Jubilee, I think it is important to consider the number 49, 50, and 51 in our code connected to Rosh Hashanah. And this is based off the official first day of the Hebrew New Year. This is the first official day of the new Hebrew year, 5,784. That'll be starting on September 18th. It's when it will no longer be Jubilee. So by the way, just humor this concept for a moment because it's complex and very theoretical. But as a decoder, we need to play around with these things. We're having fun here. And it's important that you do as well. There's no right or wrong here in this game of decoding. There's just you making sensible connections and doing your best to have something to connect it to, instead of just bringing up things randomly and it's all out of thin air. So the point here is that 51 days back from this day right here, and we're talking about this concept of 49, 50, and 51 because Jubilee is on your 50th year after having 7 cycles of 7 years. That's 49 years. Then you're in year 50, which is technically Jubilee. And then in year 51, you'd be out of Jubilee, or the clock would restart and you'd be back at 1. But we're just kind of thinking about this idea right now, again, playing around with it. And if we were to connect these two from the new Hebrew year back 51 days, this would technically be the start of that 51st year. It's July 29th. It's on a Saturday. Then the next connection would be on a Sunday, so it's not as special as this 31st connection is. Again, 49 days apart, which is your Jubilee cycle concept. 7 sevens. 49 is 7 squared. So There's this very powerful stuff here on this date of July 31st. I mean, I've given you so many connections. The other one that I think is important is this 18 date numerology. We spoke about it in my last live stream that I just did. This is a very powerful number in Judaism. Again, we're talking about Rosh Hashanah, which is the Hebrew New Year, which is practiced in Judaism. Just consider all of that. I have a couple things actually to bring up, little side notes here. September 18th, it's a 70 double-digit date numerology. That reduces down to 7. These two dates being 49 days apart are 7 weeks apart, another 7. 2 sevens is 14. So if you think of 77 or 7 sevens, you add it, instead of multiplying it, you get 14. And if you look at this day of September 18th, it's the day leaving 104 days left in the year. That becomes 14 again, or 2 sevens. Now, if you count backwards from from December 25th this year, which is like the last week of the year in the 52nd week of our year, and you count backwards all the way until this 38th week of the year, which is pretty much the new Hebrew year, it's 14. It's the 14th week of the year. This is like really weird. Oh, I also just said that at the 41-minute mark of this podcast. I gotta move on. I'm starting to freak myself out. But, seriously, I think that's madness. The fact that if you count backwards from around Christmas time through the weeks of the year in the Gregorian system, back to the 38th week, this puts you in 14 weeks left in the year on this exact day, which leaves 104 days in the year. So you have all these 7 connections over and over and over again. I mean, it's wild. So if anyone finds anything significant regarding July 31st, that'd be very interesting to hear your thoughts. Feel free to share in our Discord in the appropriate Discord decoding text channels. And July 31st is tropical Leo and still in Cancer, in sidereal, technically. So if any astrologers would like to share their gnosis, it's welcome. We appreciate you. Just share it over in the Discord, not in the Patreon comments. That probably gets in the way and gonna be overlooked, sadly. Okay, let's get into the charts and do some technical analysis on this market, shall we? Now, you guys might have been asking about this chart here that I was looking at a little bit earlier. It has all of these flags located all over the place, and we've talked about this in the past. We don't have the time to break it down thoroughly today, but it's the 247-day cycle. And if you go off the current low in the cycle for Bitcoin, which came in on November 21st of 2022, and go over 247 days, that brings you to right here, July 25th. Sorry, gotta correct that. July 25th through 28th. Let's give it that window, right? We're super close to this 247-day cycle, and I feel like this is a significant cycle because it's off of an extreme piece of data. It's the current low in the cycle. So just keep that in mind. Remember, these 247-day cycles are not always exact. It's just something fascinating that I found one day by mistake, and after seeing tons of these in patterns, I was pretty shocked how specific applying this cycle was. So I like to have fun with the 247-day cycle. We have one coming up pretty soon. And then the next one that I have marked off is from this piece of data right here on December 14th. And it brings you to like the middle of August, like right there. Pretty much where we started to move up in August 2022 before rolling over into a downtrend. Continuation of the downtrend is what I should say. Yeah, when's your August new moon? 16th. Okay. What's this date? 18th. Okay, so it's super similar. Oh shit, that'd be pretty wild. That would be super wild if we planted that. And then what that would help us with is seeing how recently the introduction of cryptocurrency has changed the overall market a little bit. Like that has enough market cap in it now to, I think, prove that it's starting to adjust month by month some changes from the historical data. And that's really cool to me as a chart analyst. When we start to get new data, I think is awesome. If everything was just the same all the time, it would be like It'd be boring, and also it would be too predictable. And the market maker, they don't make it easy on you. You know, I think that's what really sets us apart here is we're welcome to there being something different, you know, like as opposed to so many people want it to be this exact thing at this exact time. And it's like, no, man, that's immature, very immature. You need to widen your perspective here. You need to open, you know, the aperture of consciousness and see it for what it is, which is that it's going to have a slightly different form, although it fits into the similarity of the overall cycle. Look at it like tracks in the forest. You know, the deer has a different track that it leaves from the wolf, from your dog, from a bear, from a, you know, but you could look at the prints and you could see like, okay, that's an animal and that's a human shoe. That animal looks like a bear paw, probably a problem, very close. This animal looks like a deer paw, probably nothing to worry about, you know, and it's similar. Like it is really that when you're doing technical analysis and you're trying to figure out, it's the same as that kind of concept. I hope that makes sense. Anyways, let's get into some more actual TA. That was more experimental stuff. We have a couple things going on in the short term, but let's just zoom out and we have the same story as before where we have this trend line support. It's been in play for 200 days. So look to this trendline support if we're going to get any more dramatic pullbacks. If for whatever reason Bitcoin was to just keel over right now, tomorrow, it would be around 27,400 into the beginning of the month. Around the next full moon, it would be about 27.8. So right there at about 28K. And in my YouTube video, I shared this idea of this W and being an unorthodox W pattern, but that type of W sometimes happens in Bitcoin, and the neckline's around 28,400. So we could absolutely dip down to 28 one more time, test this neckline, and then have a bounce. And if we were to complete all of that, that would actually be pretty bullish. We just have to see. Until we start closing below 25,000, we're in a uptrend right now. So more bullish than bearish in plain English. Also, if we were to zoom in into the micro, we have this support trend line, which seems to be flagging. I don't want to call this the most clean pattern of all time. It could be squeezing in though. Like I could see that the data is pretty squeezed, and that would mean that our Bollinger Bands are telling us a story. Oh, they sure are. Okay, so when you start to see the bands contract like this, that's a sign that we are ready to make a move. Okay, so closure above topside band after you're in this tight of a range is not the most helpful lately until Bitcoin's actually in the bull run. When it's in this bear market in the macro, you know, the fact that Bitcoin's all-time high was all the way back here and it was pretty much 100% up from where we are today, you get what I'm talking about. You don't want to be too reliant on closing dailies above the topside Bollinger Band to assume continuation. What we can expect is when Bitcoin wants to wake up, it just goes. You know, it's the same thing as XRP. It's just boom. So when you're dealing with crypto, some words of wisdom is you want to be positioned when it's boring. You know, that's my thing that I've been sharing for over 2.5 years now. Get in positions with Bitcoin, crypto, etc. Boring. You want to be there when it's boring as shit. This way you don't have to worry about when it pops off because it doesn't give you a chance. It just moves. It's like what happened with XRP a couple weeks ago. But we were in position for how long? Like, I mean, we were making decisions on the long concept back in March. So when it moved, and it only moved for like, what, a day and a half? And you were able to take advantage of it. Like you see, like most people, they waited and waited and waited until it did that. But we're finishing up on Bitcoin. We'll get over to XRP in a moment. Now, if we were to look at this chart one more time, just pay attention to what was going on down here. And we're actually holding this horizontal support level pretty nicely. This was a little bit of an anomaly of data. If I wanted to really set this up clean, I would do this. Move this to the back. And this gives me an idea of like what we want to see Bitcoin doing. And another thing I could do is pull a fib now from this swing high over to this swing low. And I'm going to adjust this to be on linear. I'm going to put option L. Now we're on linear scale. Okay, so this is really cool. I have this on linear right now, and you can see that Bitcoin is effectively trading above the 786. So if we were to look at this fractal, the way that it's pulled, looking at it horizontally, which is going to be way more sophisticated way of looking at this, you can see that, this is actually looking pretty good. Now, what we would need though is break of high and actually have some volume supporting it, which we don't. But until we start closing below the 618, which I talked about earlier, it's around the neckline of this W pattern right there. There's really nothing to worry about. Now the 1618 sits there around 34,900, which I think is pretty cool. Let me adjust this back to log. And this gives you between 34,900 and 35,700 on the 1618 for this local pull. Now, where does that get you? Up to 35.6. It's filling that upside CME gap right here. So there you go, family. I mean, that's a short-term play on Bitcoin. I gave you the downside targets. I give you the upside targets. Until we start really closing above 35K, I mean, there's really nothing new here. We're just chopping sideways, holding this 29 level. Maybe I could quickly look at the macro and see, do we have a bi-weekly close coming in? Oh, no. We have the bi-weekly coming in pretty much the same time as our monthly close. So that's big. Okay, no bi-monthly. Okay, so the bi-weekly, that's going to be important for next week. We'll cover that when that time comes. So yeah, we just have our weekly closing today. Let's look at some Okay, all of the moving averages are good. These are really good. I mean, slope to the upside on the 55. We have the 34 about to get above the 200 simple moving average. This looks fine. The more time Bitcoin holds up here, actually, it gets these more important moving averages to get above 25K. You see how right now the 200 exponential is above 25,500 and the 200 simple is like at 27K. Well, that really supports the theory that 25 could be your next backtest level, but like one of the best buying opportunities possible, because getting below that, typically you'd bounce. We don't need to do it, but it's typically what would happen. Okay, like on the 2-day, we're starting to see the 8 become resistance and folding over, which means the same on the, oh yeah. Okay, so we're starting to see a little bit of a problem here on the daily. We're getting this coiling up effect, but the 55 is still sitting nicely far away from the 8, so no wolf cross just yet. And the 34 exponential is holding as a support. So what I would like to see is a daily close above 30,200 to get above all these moving averages, obviously. And on the weekly, like just holding 30,000 would look better. I mean, right now we look like we're about to close on a lower. Yeah. Okay, I don't want to get too complicated right now. I think this is a decent setup. I would look for, if we're going to have a pullback, that 28.5 area. That makes a lot of sense to me. And that's in alignment with this moving average here. Or sorry, that's in alignment, with this trend line. Let's go over to ETH. We're going to move faster ETH because there's really, it's the same. No story here. Okay. We've started to trade outside this trend line, which is not the worst thing on earth because we've done it before, but it doesn't look great. It's probably more fair what I just did because you could see it's really out there on the low, the current lowest low, perfectly just touching here on this correction on March 10th, touching. This was your fake out bear trap, below the 382. It's a nice, really nice fake out there. And then right now we're just kissing it. And we do have pretty good moves off of this. Like here we have about a 46%. Here we have 50% off of this. About 24%. I mean, even if we had 24%, we would be moving up to 2,300. That'd be amazing. In the year 5783, 23, Jubilee, 23. And ETH has a special code because Ethereum has the 36, which is the 36 is 666, and ETH has 33. Oh shit, ETH also has 48 with Satoshi's 48th birthday. I forgot. I haven't done much decoding on Ethereum lately. It's spelt weird. You'd want to put the I there naturally with the way that it's spelled. Anyways, it doesn't matter right now. Oh, it has the 50. That's crucial because we were talking about that before, the Jubilee being on your 50th year. So you guys have more understanding now of what that number represents. Okay, yeah, really nothing to say here. I would say that breaking below this horizontal line right there gets you to about 1800 on the nose, and then closing below 1800, and you can mimic what happened back in a month ago, somewhere around the 382 fib. And Bitcoin moving up right now doesn't necessarily mean it's going to instantly be bullish for ETH, because I believe Bitcoin dominance has started to roll over a little bit. So you want to be open to that, you know? And I'm still fairly confident that this was the completion of the automatic rally on this. That's why I gave that call out months before it happened. And I was open about when it did occur, to be considerate of it. And it was amazing how it came in right before that solar eclipse, like literally just days before, perfectly at the level we're expecting to, which is the 0.5 fib. So yeah, it would be nice if we can make another leg higher, but it would be, you know, it would just be a trap. Really would want to de-risk in that opportunity too. Yeah, I doubt this. I really doubt this. No way. I doubt this. That we would get to 24.6. That'd be wild. If we can get slightly below the 618 right now, I mean, that'd be cool. I would love it. But yeah, no entertaining that right now until we start to break highs. All right. Okay, XRP really not looking good. Because that rejection right there, followed by this formation of a W with the slightly higher high in the wick. I don't like that. Okay, I'm going to go to the 4 hour. We're going to have to get more zoomed in right now. I'm about to clean out a chart so I could just show you guys this idea on a very, very clean. Excuse me, I can't. Okay, beautiful, beautiful. Okay, great, great, great. I'm going to go to the 4 hour. I'm going to show you guys what I'm doing. Actually, no, I don't want to do it there because I want to... You know, fuck it. I'm just going to delete this whole chart. I don't care. We already hit my levels, so you guys know the story. Now I want to be on the 4 hour, and I'm going to turn on this, and you're going to see something important. You got the wolf cross right there. So this is on your 4 hour. Your 8 goes below the 55. That's a bear sign. And coming up to the 55 now is natural. But let's go across our lows on the 4 hour closes. And that gives you this level here around 70 cents on the nose. So 70, very psychological level. You want to keep that in mind. And now let's just brush through a couple levels that we see it's tending to test, which is around 71 cents. So this gives us two levels on the downside. Now we're going to be creating some upside levels to look at right now. We're going to go to this first rejection there, which I think is crucial because it led to the most dramatic sell-off that we've seen. So that's my reason. And then right there. This brushes us through a couple of liquidity levels, but these are three rejections off of 84 cents, followed by obviously the initial one. So this gives you some upside levels. If we were to do Wyckoff on a really short term, this I don't like already. This looks distributional because we came up with this slightly new high on 4 hour closes and then started to correct right back to support. So naturally, if you start to close below support here and then get rejected, that's lights out. Not good. But now if we were to come up, I'll show you the fib levels so you can get an idea. Okay, let me turn this on linear because it's a small amount of data. Okay, you could see right now we're coming back to the 236. We already got rejected off the golden pocket, so that's an automatic rally. So this is your setup, you know? You have buying climax, selling climax, automatic rally, and now you're back here where like, yeah, having like a little bit of a test is okay, but you want to get back up over this level right here. You want to get back above 85 because you want to break your automatic rally level so that you can have an SOS, and that's really where things get fun. Now, the problem with this asset is it doesn't like to hang out in the top too long before it barts. And look at how it's behaved before. Like, I'm gonna hide everything. This same shit happened before. It happened here. It happened here too. And the current yearly high. Look at the structure. Just first couple days is when it gasses out, and then huge correction, lower high, and then keels over for a Bart head. Same shit back here. Straight line in the beginning, you get your highs, correction, bull trap, deep correction, Bart head. Same thing over here, and the same thing over here, and over here, and over here, and over here. It's like over and over and over again. Even back here, the same situation. Your initial high comes in first. Correction, lower high, bull trap, Bart head. We'll do it again. High comes first. Correction, lower high, bull trap, Bart head. It's so fucking cyclical. We don't want that this time, but it is what it is, right? Like, I keep telling these people, man, like, all you need to really do is study this chart, and you're going to be able to make so much more sense of why it's doing what it does when it has a breakout. It's the same story over and over again, and that's why I did not sit around and wait for some, arbitrary price to the top. I knew the technical levels, and we got de-risked there, and that's all that matters, securing your bag. Now, I have not changed my stance that I am open to a $1 up to $1.33 move. But it has to happen pretty soon. And it's very rare, family, for XRP to move up and then stall out like this and then go up another leg. It's very rare. You can't find many examples of what I just said. You just can't. I mean, right here was one of the examples. And that could be okay if that is the case, because remember, we had the SEC case ending over here. Starting over here. And over here, we are not over with the SEC case. It might be another year until it's over, but we at least have some partial short-term regulatory clarity as for XRP, that it's not a security right now. As for the Ripple case against SEC, or SEC against Ripple, it's still going, right? But this is when it started. And you look at what I'm showing you right now, you initially have this run up, a little bit of a Bart head, but then you held structure and kept it moving. That would be beautiful. And that would kind of be the concept. So it could be like a repeat of the same sort of thing. It was like, here was your crash because of SEC suing Ripple. And then this was your first Bart head. Then you had a little chop and then blast off. So let's actually look. Let's look from the day we had this wick till the day we went up to a new high. 72 days. Fuck that. Holy shit, that would be like going up into September. No, I doubt it. Be wild. 1 second, family. Okay. Really needed to take a sip of water. But needless to say, I mean, let's analyze this past data from what I just pointed out a couple moments ago and consider it. Could be very possible. So super open-minded to this. Let's see how it plays out. But I already gave you my upside targets somewhere around $1.03 into $1.33. I would like to just get to like $1.30, but $1.03 to $1.30, that is kind of where I'm anticipating. And that's based off of a fib pull that I've shown you many times. So we don't need to get too much into that today, but it's right there into the middle of the first leg of the golden pocket, moving you into the 702, and then the 130 levels right there at the 786. Very possible. But for now, getting above the 0.5 fib, definitely ideal. That's about 75 cents. So I would like to see 75 cent weekly close, bi-weekly close into our monthly, meaning I would like to see XRP close off the month of July at least 75, 76 cents above the 0.5 fib, and then just one more brush to the upside would be beautiful. Now, some people have joined recently and they're aware of other alternative analysis, and a lot of people don't like my truth here, and that's okay. You know, it's important that we get in the sauna sometimes and sweat it out a little bit and hear somebody else's, perspective. I have a very interesting take on this project. I've been pretty accurate on this project for about 2.5 years now. And because I've studied it so deeply and I'm aware of the way it moves, that's why I'm not entertaining an all-time high right now, anytime soon. Maybe into the summertime of 2024, next year, about 1 year away from today, I would entertain that. But I feel we have the opportunity to make it up one more leg higher, followed by a rejection, and then come back down into maybe the 50 cent level. And we'll retouch upon lower targets in the future. First, let's get through this moment here. And I already told you, if we start to close below that 70 cent level, the 61 cent level could definitely be back tested. That's just a technical play. All right. Let's wrap up this podcast going through some of the altcoins. We have XDC, which has started its automatic rally. Why? Because it got above the 382, like I teach you guys. And you see how this goes? It's just straight line parabolic breakout. So we have a 0.5 fib touch, almost. It's pretty nice. But we've gotten a lot of volatility over the past couple of days, so this needs to chill out a little bit. We have a fib pull from this swing high at 19 cents down to the swing low, about a penny. We lost a pretty substantial amount of value, but not as much as we've seen in other altcoins. So XDC had an incredible bull run, and its correction so far hasn't been as brutal. And right here is your C19 crash. And you can see how from support of the C19 buyback all the way till today, it's up 7,000%. Okay. Like, remember, people are talking about Bitcoin Cash and they're talking about Litecoin. It's like, look at Litecoin compared. This is your support of the C19 crash. It is currently up today 115%. XDC is up 7,000%. Let's look at Bitcoin. So remember, this is 115% up. Let's look at Bitcoin from, these are your C19 support levels up to where we are, 366%. It is outperforming Litecoin, and Litecoin never made a new all-time high. There's your all-time high from 2018 when Bitcoin was 20K. This is your all-time high attempt. It was a double top. Never went into price discovery. Bitcoin's currently at 30,000 right now. So it's 10 grand up from where it was back in 2017. Like, just gotta you do sometimes gotta compare and contrast and see what's the better performing asset and put your build your investment thesis around that. So anywho, XDC, incredible performance, like really wild. And now that it's moving into an automatic rally, we got to see how explosive this can be. I believe we have an iteration of it back here. Ooh, okay, you really want to watch out for this, family. So if you see right here, I have from this swing high to the swing low, very limited data over here. So this isn't the most, this isn't a careful way of making bets, but it gives you an idea. And you see how we swiped up below the 0.5 fib. Now, that's kind of like what we just watched recently. So if we really want continuation, we need to see closures above the 0.5 fib, and then we can entertain the golden pocket. And then you're well aware that about 10 cents would probably be the level to get rejected at. We have a couple pieces of data here on the horizontal range. One moment. Okay, so I have this level about 12. Okay, you see this is perfectly in alignment with the top of the golden pocket. You have rejection, 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 small time above it, followed by, once we got below it again, we came up, got rejected again, and that's perfectly at, that's perfectly at your 786, that last rejection, which led into lower highs, and then right there confirmed bear market. So upside, if this thing wants to really rage, you have that 11 cent. Keep that in mind. If we do get another push for Bitcoin, if we get another push for XLM and XRP, I should say it in order. If we get another push for XRP, it will push XLM, which will also push XDC, and they'll all catch up to each other. So you got to be considerate. If we see a $1.20, $1.30 XRP, I would not be surprised to see a 10 cent at least XDC. Let's just see how that goes. Absolutely incredible performing asset. I will probably build a little bit of a position in this after the fall time. We'll see how Q4 goes, but this is definitely on my radar as one of the projects. I will be de-risking some of my plays completely. I'm not sure which ones just yet. We'll get there when we get there. Right now I'm focused on the de-risking process and then we'll get into the reaccumulation ideas at another time. But XDC is definitely one of those I'm putting in my portfolio. So there we go. Automatic rally engaged, technically, gave you the upside targets. Now it would be invalidated if we started closing below 3 cents. So if we started to close macro candles, like the 3-day, 5-day below 3 cents, it's over, invalidated, and it's still your technical automatic rally, no matter what. For crypto, once you get above that 382, that's it. How high it goes is depending on factors. But this right here was your automatic rally. Then you had your correction. That's the end of your automatic rally. A little bit of a lower high, followed by this spring, which is a very unorthodox spring, but it is. And then it led you to your SOS right there. Boom. SOS, backup phase, which lasted a while. And then, yeah, wild bull run. Let's get to the sandbox. Ooh, God, this has dropped a lot since I last. Holy shit. Yeah, don't touch this thing like with a 100-foot pole. Okay, 94% correction. Okay, it's not that bad. Like, it's bad, but it's not that bad. Okay, one thing I have a problem with here is it has no data before the C19 collapse. So we don't know how proofed this really is. Like, if there was to be something that occurs in September, October, this thing can drop all the way to like a penny quick. So you got to be careful. I like projects that have data that came in before C19. And the only reason this thing did good was because of when it was brought to the market. It was brought to the market and it was in the right place at the right time. That's luck. Everything was going up around this time. Pretty fascinating, though. This had a nice bull run, about 1,400%. So this is a game. I believe this is tied to gaming, correct? Yeah, no, this is not good. Because it really broke below the 1618. Yeah. All right, well, your next move is here. $0.23. Now I'm going to leave these two markers because I think those play into if this is to have a little bit of a buyback. Now I'm going to delete this and I'm going to add in a bull fib. Oh yeah, this got to, yeah, no, this isn't good. If we are to approach around this territory of 20 cents, it's a pretty nice buyback. Like, I mean, if this repeats like what even Litecoin did in the last cycle, it could go up about 3,000% off of that correction. So I would wait on this, but this is not a safe play because it's such little data. Like, it just does not have, it hasn't built the calluses on its hands yet, like, it's nice to go through the pandemic and to go through like a .com bubble and to go through all the bullshit, because then you've developed that thicker skin. And as an investor, you want to look for projects that have made it through the trenches. Like, you don't want to invest in stuff heavily that was introduced at the right place at the right time, where the Federal Reserve was printing historic amounts of money and throwing it into risk assets. Like, that's not proof of a good project. That's why it could have a 95% correction. I just think about that kind of stuff sometimes. Now, the same thing goes with what we were saying before about Litecoin. Why would I want to invest in something that's barely recovered off of that, crisis? And even in the environment of all this money printing, it was unable to go up to a substantial new all-time high. It's like, what's going on here? Well, the investors aren't They don't care about this thing. They rather put their money in the sandbox. You know, like, why? I guess, you know, it fulfills whatever, you know, marketing at the time. Like it has probably marketability. That's what a lot of this stuff ends up being anyways. I remember it back with Polkadot as well. So anyways, the downside target is here into this range around 20 cents. Upside targets, I'm not really entertaining too much of that right now, but I would say 93 cents looks like a nice big buyback level, 93 to 97. And I would not be looking for much higher. You know, like getting back above $1 now would be interesting. It would probably require some big money to step in. And I don't know if it's there. Okay, we're moving into Thorchain. Okay, another one that went lower into June. Very interesting how this is like disconnected from the blue chips. This is a 96% correction. Oh, I remember this project. This is that project that did like fucking crazy. Yeah, 120,000%. I remember this. That's why it's giving it all back up now. 96% losses. High, lower high, lower high. Perfect blow off tops. 3 pyramids. Structure. So you have your 3 pyramids followed by your rejection level at the support, coming back up, rejected off the 382, and continuation of the downtrend. This has the opportunity to go much deeper, like I marked out, and it's amazing that it hit my level pretty spot on in the nose from the last. And by the way, these are not definitive levels. We're going to adjust them over time because you need to, you know, that's the way this is. By the way, you did not hear, like, I don't buy off of just some arbitrary whatever. Like, I map out what I'm seeing on the horizontal levels, and then I'm waiting for the time to strike, you know, and be positioned at the right time. I'm not trying to be perfect catching the exact bottom. That's not what this is about. You're never going to be able to catch the perfect bottom or the perfect top. You need to develop your investment thesis conservatively and in a way that, you know, you could be flexible. That's what's most important. And you adjust your levels accordingly because you need to dollar cost average in this thing because you're never going to be perfect. You don't want to go all in on one buy or 2 buys. You want to break that down into several smaller entries. Anyways, not financial advice, but I think you get the idea. And I teach all of this, by the way, in the Crypto Mastermind course. It is really packed full of data for people. Like, no matter where you're at in the process, there's going to be gems in there that will help you refine your investment thesis. So as for upside targets in this, it seems that the 236 is in the cards. Even a move up to $3 could be possible, but I don't think it's going to happen right now. Like, this thing is continuing down more and more and more. I could see there's a trend line right here that's pretty clean. 1, 2, 3 touch points. That's a confirmed trend line. This now is like a bear flag. God, this is so sad to look at. If I wanted to like make it, oh, yep, okay, well, that's not weird. This isn't perfect, by the way, because I'm not in linear right now, but it's not that important. So you're getting the meat of the data. You got your low, and this is a weird W. This is one of those W's that it really is elusive. But yeah, coming down into 12 cents, that's a 98% correction. Not even. 99% of it's, yeah. But okay, if you can't hold the 34 cents, then you have thin air between here and there, right? So this is not a weird concept. Could Thorchain Rune go all the way down to 12 cents again? Sure. I mean, it went up fucking 100,000%. Why can't it lose 99%? It's happened before. And by the way, rarely do projects recover to new all-time highs after they've had such deep corrections. There is room for the future and some anomalies with this concept. And the only reason I am open-minded to this is because when we get regulation and all these shit coins go away, that money needs to go somewhere. So it's going to go into the projects that are ISO compliant. It's going to go into the stuff that actually has a working technology, and it's not just a bunch of bad actors. And I've talked about that several times, even in my podcast that I did with Bearable Bull. That's why I'm very cautious right now about adding in speculative plays and venture capital into my portfolio, because I want to get through, closer and closer to the Bitcoin halving, the more secure I feel, especially with that amount of data on the charts. And given that we've been about 2 years now in this so-called bear market and approaching that 2.5 year mark, we're building a ton of data, but it's showing us what? In this chart, it's a continuation of a downtrend. Well, high, lower high, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low. Still just came in about a couple weeks ago. So this is not good. This is not positive. I would not be overly invested in something like this that's just on a perpetual downtrend into potentially what could be another 50% correction. So be very cautious right now. And this becoming bullish out of nowhere is probably unlikely, because even with Bitcoin breaking up closer to the 0.5 fib, this thing is now breaking into lower lows. So it's not following Bitcoin or Ethereum at all. Had its run, now it's giving back its gains. We have Polkadot. Ooh, okay. So Polkadot has really confirmed this horizontal support level. I like that because it's clean. Again, I don't really trust this long term because we don't have that C19 crash data. This thing was just brought to the market at the right place at the right time. It has this promising technology as a technological layer. I'm aware of the Polkadot ecosystem. I'm aware of Kusama. I'm aware of all of this shit. It doesn't matter. It's still given up, most of its gains that it got off of its launch. It's right back at its launch price. It only lasted a couple days before it got into this $4.25 level, and we just back tested it twice on a double bottom. So this could very well be your low for now, which is nice that we're covering it, considering it does look like a pretty clean double bottom. But in order to confirm that, we need to break the prior micro high, which would be this 236 fib and above February 18th highs. Whew, a lot of information. Okay, so until we get above there, this is not a confirmed double bottom just yet. And if we start to close below $3.80, if we start to close below $3.80, that's lights out. This thing could go to $1. Yeah, not super confident in all this stuff. Oh, by the way, remember I was telling you guys about this rare higher high bull trap? Well, Polkadot did it too. It basically mimicked Bitcoin. It mimicked Ethereum too. But you can see Ethereum's performance versus this performance is totally different story. This thing lost 92% of its value, and right now it's only up 24% off of lows, recent lows. Okay, if we look at Ethereum has lost 80% of its value, pretty much the same, but now it's up an additional 114%. So family, when we're in a bear market, whatever that means to you, you must be cautious of speculative plays. ETH and Bitcoin are not speculative plays. They just aren't. I know people who are XRP maxis or XRP army or whatever they call themselves. They're so anti just seeing the light. It's they're blinded by the light, And I'm sure any of you who've been following along maybe 10, 20 of these podcasts, you could see enough examples where that tribalism, it's not beneficial for a portfolio, not only in the short term or in the long term. Again, I know we're just picking out a random example here of a coin that was voted on today in the Red Pill podcast, but gives you kind of an idea, because I remember when Polkadot came out, all of the big channels were it's an ETH killer. What are you talking about? What did this do? It did what everything else did, and ETH has outperformed it. Not only in total returns, it has more data. It's way higher market cap. Had a better bear market thus far. Is up 115%. This thing's up 20%. And it was just at lows a couple weeks ago. But it's the tribalism and people wanting Bitcoin to fail or wanting ETH to fail or wanting XRP to fail or it's by you wanting it to fail just shows that you got to work through that, and I know this is sometimes random when I start sharing some of these ideas, but it's because I do see the tribalism out there in the crypto space. And I want people to realize if you ever played a part in that, there's no shame or guilt here. It's okay if you woke up, but if it's still kind of getting in the way of you developing a solid investment thesis, then it's up to you to just pause, reflect, and say, hey, has my hope been outweighing truth? Am I not realistic because I'm too optimistic? That's all. right? But this Polkadot chart's not looking so fantastic. You know what I mean? And if we start to break below that, that 380 level, this thing could get real bloody real quick. So I'm really glad I de-risked this thing back in the day when I had the chance. I think I got in around 5 was about my average, and I remember selling vividly into the $30 range. So I decided to do that for multiple reasons, but a lot of it had to do with highly speculative positions into the start of the Shemitah. I just did not want to be holding on to stuff that I really wasn't super sure about, and ended up playing off pretty nicely. So the long term on this, I mean, it's clearly slugged to the downside, and I mean, ETH lost 95% in its first bull run, so that would be like bringing this thing back to 270. And I definitely think that's in the cards. It's absolutely. I'm not like bearish on Polkadot, by the way. I'm just being realistic here. This chart does not look good comparatively to other things that are going on right now. But if it could get up to the 236 and break it, then that would confirm this double bottom, and we could definitely make it between the 0.382 and 0.5 fib, because that would be a normal automatic rally, and that sets you into these prior support levels, which eventually broke. So I would say $14 is about as lucky as it can get right now for DOT, and I doubt that right now. I doubt it's going to move up 140% out of nowhere. Can it? Sure. But ever since the end of this run, it has not been making any bull moves, sharp bullish moves. So retail's left this project. It's pretty obvious. So I'm more banking on the 236 maybe retested if there's any bullish energy in this, and then another rejection down even deeper. Okay, now we're going to wrap this up with Hex and PulseX, excuse me. So we're going to go over to this chart right here, second tab, Hex. This is important we look at. I don't know if I've looked at this chart with you guys in a while. And this is just quick thoughts on Hex, because I went over this quite recently. Okay, we're looking at the weekly chart right now. We have this broadening kind of pattern, megaphone pattern, but needless to say, I want you to just pay attention to this bottom support, what was a support. You can see it coming in right here before the final moments of this thing just shooting up to a new all-time high. And after hitting the all-time high, it gravitated right back to this line. Then after it touched it, got a pretty decent bounce, rejection, back down to the line. This was effectively your selling climax for Hex. Then after that, you had your automatic rally. Now we have 3 clean touch points at the top of this, so we'll leave this for the future. But for now, we really want to be focusing on this prior support, because it broke through on June 5th, and now it's been coming up to it and getting rejected on candle closes. So that's really important. This is a weekly chart, by the way. Coming back up to a prior support and getting rejected off of it is confirming it as a resistance. So this idea of a 0.003 cent Hex could be coming in sooner than later. And this is pretty evident. If we start to close a weekly below 0.007, it's going to look rough. And if we look at this based in a fib pole concept, where we have this big range of data, horizontal trading range, we have the 236 sitting there at about almost 2 cents. If out of nowhere Hex was to start getting pretty bullish, that would be your level I would look to. And then still, correction. Higher than that level would be odd. But is it possible? Sure. I believe there's a documentary coming out, or it has already released, for Richard Hart. Maybe that is what it will take for that last bit of bullish energy. Maybe get you up back above this trend line and into that 2 cent level, back into that 236. And then, I wouldn't be surprised if there was a sell wall. Now, I've heard that allegedly the news of this documentary coming out was right around here when it got a little bit of bullish energy. But then you see, this is a Twin Towers that I don't like. So a Twin Tower structure. You see this higher high wick, plus it ended up being a red candle in the same day. That's a huge warning sign that this was just driven off of news or rumor, and now it's selling off. So your first line is about 0.009, closing below that. You're going to move down to 0.008, closing below that. You're pretty much down to a double bottom. I wouldn't even call it double bottom, because it's only about 40, 50 days of data, and I don't think it's going to happen. It could probably chop around a little bit to get down there. There's the volume sort of left this project now that it's had this huge sell-off, which means retail has given up on it. That's just the truth of the matter. Now let's get over to Pulse. Let me adjust this so I could try to fit this data on the screen for you guys. It's really hard, but needless to say, we have the Pulse X chart up right now. We have a bear fib pulled from this level right here up to this level. I'm not even going to try to read out these prices because it's like fractions of a fraction of a penny. But the reason I decided to pull it from there is because it was a bounce before a little bit of a lower high relief rally, followed by this sell-off, and then us coming back up to it, rejected once, twice, 3 times. Confirms this is a really important horizontal level. So I'm pulling a bear fib from here up to the current high in the structure, and you can see where the 1618 is coming out. That's the golden ratio. And sitting at about this level right here, you could just take note of it by looking at the right of the screen if you want to write that level down. That is most likely the next level to anticipate for PulseX, especially if HEX starts to correct and break down, as I shared before. Back to like the double bottom territory, I think would be enough for this thing to start breaking down into another low. About right there. Okay, so the 618 is in the cards. Now, if this was to have a buyback, you'd want to be looking at this level, because if we can clear this level on a daily close, then absolutely this thing can make it up probably somewhere between this level right there and this level. Getting any higher than here, I am not entertaining at this time, just because of what's going on with this project. I'm aware of enough to know that this is not in a bullish conversation anymore. It's more on the bear side, and retail is kind of leaving in droves. It's been like an exodus for the most part, and now they're just a bunch of stakers left. So yeah, this is really interesting. Oh, and by the way, I think tomorrow I will be having a interview with Randy Hilarski. So shout out to Randy. He had me on, I believe, at the end of the Shemitah, and was talking with me a lot at that time about utilizing my work, and kind of, he's more into Hex and the Hex ecosystem and all that, but he's very sophisticated in his awareness of like economics and what's going on in the financial system, and just a fascinating guy to speak to. I know that me and him are going to have a good time catching up together, and I'm going to be probably sharing this analysis again on his channel. If he wants me to, and maybe I could break it down a little bit deeper and he could share some of his thoughts. But for now, these are the technical levels to keep in mind for your downside, and for your upside, that would be your extreme upside level. It's more than likely just another test up here. Given we have a little bit of relief on Hex to break this prior support trend line, get back up to this 236 around 2 pennies. And then even then, that would be a real important level, make or break. If it can't get back above this 236, you can absolutely come right back down to below a penny really fast. And still kind of looking for the 0.003 cent level on Hex. I think that would be one of the better, buying opportunity moments, but we'll wait and see for that time to come. And I'm going to wrap this one up here, family. I appreciate all of your support. I hope you guys enjoyed today's podcast. It was definitely a long one, but I packed it full of so much because we needed to, leading us into this FOMC meeting. I hope you guys appreciate, us going into overtime on this one, because, well, I appreciate you guys and I want to bring you the best value possible. Really means the world to me to have your support, and feel free to share any gnosis you have about anything that I shared in today's podcast over in our Discord, and also make sure to vote on the coins for this upcoming week. Try to pick some stuff that we haven't looked at in a while. Looking forward to seeing what you guys have to say. So wishing you all a beautiful rest of your weekend in the Matrix. Much love.